Welcome back. Still tuned into Inside Out. This is our Swotlight segment. So Nigel, introduce the company that we are discussing on this segment.
Well, Sonal, the company that we are focusing on is HealthCare Global Enterprises. And before we get to the company's business, well, let's focus on the stock price move for just a bit. It's corrected close to around 13% from the highs that we saw in November. It's up close to around 30% though in the past 1 year or so. Well, the company is focused on providing end-to-end oncology care through its pan-India chain of oncology-focused specialty units. They operate 22 cancer centers and 3 multi-specialty hospitals, with the operational beds totaling 1,830 odd. The management believes that they are well placed to battle the increasing cancer incidence here in India.
Okay, so that is about the business, but tell us more about the operational matrix of the company. Since it's focused on oncology, I believe their occupancies were hit during the COVID period?
Well, that's right, Sonal. Their occupancies have been improving over the past few quarters from around that 40% odd mark to the mid-60s, though the average revenue per occupied bed has been range-bound around 37,000 odd. But that is because emerging centers have been growing at a faster clip than the mature centers.
Okay, explain that in a little more detail, Nigel. What is the difference between matured and emerging centers, and how do the operational matrix pans out there?
Well, Sonal, emerging centers represent centers operational after 2017, while mature ones are obviously the existing ones which are there for a longer duration. Now, HealthCare Global has a large number of operational beds in the mature centers, while on the average revenue per occupied bed, there is a difference of close to around 10,000 rupees between the two. Now, comparing the Q3 FY23 with the previous years, the mature centers revenue is up by close to around 17%, while emerging center revenues, well, they are up by close to around 28%. However, the problem is that the emerging center margins have got diluted in the past 1 year or so. And that's evident because mature center EBITDA has grown at the same pace at its top line. But emerging centers EBITDA is up a mere 3%. Just to drive home the point, Sonal, the company reported margins of close to around 18%. But there's a big difference between the mature and the emerging center margins. From their mature centers, the Center of Excellence in Bangalore, that boasts of solid margins of close to around 28%. And the management has said that as the emerging centers transform into mature centers, the combined margins will trend towards 20% on a blended basis and then trend up to the mid-20s.
Okay, that is about the margins. Nigel, tell us something about the top line. What are the constituents here?
Well, for the past quarter, the mature centers contributed close to around 72%. Emerging centers, they contributed close to around 24%. While under the Million brand, it operates fertility centers, which contributed close to around 4%. The company says it's focusing on market leadership in Bangalore and scaling up North India centers in the near term.
Nigel, in the past few years, what has worked for the company is that they have been able to deleverage their balance sheet big time. It is owing to the PE infusion. Tell us more in this regard.
Well, that's right, Sonal. They were on the verge of becoming debt-free in the next couple of years or so. Now, PE Capital Singapore-based investment arm, Assesco, has been betting on the company and gradually upping their stake. Initially, they infused capital through a combination of preferential shares as well as warrants. They further bought stake via the open offer route. And in June 2022, well, they picked up more than 1% at around 285 rupees per share from the erstwhile co-promoter, that's Mr. Ajay Kumar. Now, post the CVC capital infusion, their balance sheet is in far better shape. They have also appointed a professional CEO, halted new greenfield expansions, and also improved the workforce management measures.
Okay, so that is some interesting information. But Nigel, let's wind it down with the shareholding pattern and how do valuations shape up?
Well, Sonal, the PE has majority stake. It could change hands in the coming years. That's going purely by the nature of a PE's investment. But let's bring up their shareholding pattern up for you on the screen. And also on the valuation parameter, it has some cushion if you're looking at FY25 EV per EBITDA. That's in comparison to some of its larger peers. There is some valuation comfort on that front. All
right, Nigel, that was some good information on HealthCare Global Enterprises, but we have completely run out of time on this episode of Inside Out, so it's a goodbye from Nigel and I.
But you do write to us and tell us about companies that you want us to discuss. We'll try to feature them on our show. Thanks so much for watching. Friends.